Business Director Kimberly Williams, and I am excited, especially for the month of April, where everyone agrees with us that having that basic financial education is important. And so tonight we're kicking it off with winning with FNAs, and we're going to talk about budgeting, right? And I know for some of you guys that's a dirty word, but after tonight, you're going to enjoy hearing that word, right? And you're going to know how to budget and just understand the aspects of budgeting. And so I'm going to share my screen so we can get into this hot topic. Remember, these are our kitchen conversations. Talking about money, we want to make it the norm in our community. So I am Business Director Erica Ba here at our Infinite Company, winning with the OIC 10K team. And we definitely want you to understand the aspects of a financial needs analysis and know that it begins with your budget. And so, what is a budget? Budgeting is the process of creating a plan to manage your money, ensuring that you allocate your income effectively to cover your expenses and savings goals. And we should all have goals and our money tied to a goal where we don't wait until we receive that income to decide what we're going to do with those funds or that money. We have already had a plan where we know, hey, I can track and make sure that I'm on track with my goals, that I'm just not waiting for that. I have directed that money, and that gives us control. So, what is an income? An income is the total amount of money you earn, whether it's from a job, a business, an investment, or other sources, but that's the money that you have earned. And it's important to know your net income, which is what you take home after taxes and deductions. Yes, those are some more dirty words: taxes, deductions, and net income. And for those of you guys who are saying net income, I thought everything that I received from a job or a business is all mine, but no, not in our society. We have a gross income and then we have a net income. And so here's some examples of a net income. A net income refers to the amount of money you take home after all your deductions, such as taxes, insurance, if you choose to utilize insurance, and then retirement contributions if you choose to participate in the retirement options at your job or you are obligated. And a lot of states right now, they are making contributing to retirement mandatory. So we have to be aware of that. And it really helps us in our future selves. And other withholdings are subtracted from your gross income. So it's your total earnings before deductions. That's what gross income is. Now, net income is actually what you bring home minus all of those other things that you may contribute to, and then the taxes that we are all obligated to pay. And so the net income is how you would set your budget. So, for example, if you are a salary employee, you do not receive an hourly wage, but you receive a salary. So during your contract or at the time that you signed your contract with your employer, and they said, well, Erica, because of the value you bring to this company, we're going to pay you X amount of dollars a year. And this is our obligation to you, the salary. So with our first example of a salary, we have this employee is receiving a gross income of 4,000 per month. And remember, we said gross income is your total earnings before your deductions, before you subtract your responsibilities. And so everyone can get excited, especially when you're starting out. And it's like, oh, I'm making a gross income of 4,000. And then when you look at your deposit in the bank, you're like, that's not 4,000, that's less than 4,000. Well, pay attention and discover why it's less than 4,000, because we have mandatory deductions and then we have deductions that we can volunteer for. And so our mandatory deductions will be federal taxes, state taxes, and now health insurance if you do not have another plan to take care of your health insurance needs. And this depends on what state you are viewing this information. It might be mandatory for you to contribute to a retirement program, but we definitely encourage you to save for your retirement future here at OIC 10K. And so when we look at all those deductions, especially in this individual's income tax bracket, federal taxes, they are taking away $400 from this pay period. And then state taxes, they're deducting $200 from this pay period from this individual. And then the health insurance, that's another deduction of $150. And then the retirement contribution is $100 from this particular pay period. And so the net income minus all of those deductions, whether they're mandatory or it's something that you signed up for, you will actually bring home $3,150. Don't get depressed because some of those deductions will definitely help you in the future, especially retirement contribution, and then the health insurance would allow you to maintain your health so you can continue to add value to your company. And so that's an example of a salary employer when we want that's helping us really connect with net income and what net income is all about. Let's look at the example of an hourly worker and their gross income. For their gross income, they're making $15 per hour and they are able to work full time. So they are working a 40-hour per week. And so their gross income is $600 per week. But are they bringing that full 600 home with them? No. That's gross. So that's before obligations, before deductions. And so with this individual, based on their tax bracket, their federal taxes is $60, their state taxes is $30. They also contribute to Social Security and Medicare, that's $45. So minus all of those deductions, they actually take home $465 a week. So now you have a clear understanding between the difference from gross income and net income. And we can move forward with our budget. So, budget covers expenses, and you have different types of expenses. You can have a fixed expense, a variable expense, or a discretionary spending expense. So fixed expense are those regular, predictable costs for your daily living that don't tend to change much, such as your rent. Maybe you own a home and you're responsible for paying for a mortgage, utility bills, insurance, whether it's life insurance, or car insurance, or even car payments. Those type of bills and expenses we can put in the category of fixed expense because they tend not to change often. Now, variable expenses, and that word variable, it means that it fluctuates from month to month. Things can change. Our variable expenses, when we are creating a budget for ourselves, and we definitely need to make sure that we have a category for these type of expenses, they change depends on what's happening in the market, like your groceries. And because the increase of inflation and cost of living, that those items that we tend to enjoy and those brand names, they're costing a little extra. So you need to take that in consideration as you are creating a budget to give yourself some room. And especially when it comes to entertainment, dining out, and gas. Discretionary spending, these are the hobbies, the vacations, the wants that we may have that particularly does not qualify as a need, as necessary in our life, but they definitely make life enjoyable where you can look forward to that vacation. And you don't want to put yourself in a position where, oh, you're doing last minute vacation plans. It's okay to plan ahead and allocate money in your budget for vacation time. Everyone should have times to refresh themselves. So that's okay to plan ahead and direct your funds, money that you earn, your income, to allow you to create an enjoyable experience for yourself and your family. So that takes care of the expenses column that you should consider when creating a budget. Now, let's look at savings and debt repayment. It's crucial to prioritize saving and repayment of debt in your budget. This can include saving for emergencies or the long-term savings as retirement for your retirement future, or even big goals like buying a home or purchasing an income property or even a vacation home. And if you have debt, paying it off should also be a part of your budget plan. And that's making sure that you maintain a good credit score because the credit score lets lenders know, hey, I can trust this individual. This individual is responsible. They take care of their bills. And although you may be receiving this information later on in life, it's never too late to reset and start over and take the steps to reposition yourself or create a better reputation when it comes to your financial needs. And so when you're budgeting helps you track your expenses, and then it also helps you to make those adjustments. And that's just for individuals that are receiving this financial education later on, and maybe you made some mistakes. Well, creating that budget and tracking your income and expenses, it helps you make those adjustments before things are too late, where you can kind of have some kind of control and be able to respond to emergency situations. And there are a lot of apps and tools that are available to help you track. You can do things manually yourself, maybe keeping a spreadsheet, using some of the tools that are available through your computer apps, or you can invest in virtual apps or companies that set up tools that will help track your expenses that you can link to your checking account. And then a lot of banks are also offering those tracking tools as well. We're helping you put your expenses in different categories where they can help you identify the amount of money that you have spent in the grocery store or your discretionary funds or even your fixed funds, just to help you. And by regularly tracking, you can spot areas where you might be overspending and then quickly adjust your budget accordingly. And you should review your budget monthly to see if you're sticking to it or if the adjustments need to be made. And it's okay, but it's good to know where you stand financially. And so creating a budget, there's a simple method that can get you started. And this is the 50-30-20 rule, where 50% goes into the needs category. That's your housing, your food, your utilities, your basic needs for everyday living. And then you can allocate 30%. It can go to your wants. Those are the entertainment, the dining out, treating yourself. You should pay yourself and reward yourself because you're the one that's doing the work to generate the income that you are receiving to pay for your living. And then 20%, you can allocate that to go towards savings and repaying your debt. And so we definitely wanted you to have the different examples as you begin this journey of budgeting. And it's necessary. No matter what income level, you can be a high income earner, or you can be on the moderate side of earning income. Everyone needs a budget. Even in business, as an entrepreneur, you should know the numbers and keep up with the expenses and know the difference between your assets and your liabilities. So here's another example. And trust me, I have tried them all. This is an example that uses envelopes. So if you do not have digital accounts, multiple digital accounts, where you can separate your funds and you just want to start something where hands-on and you're like, well, I'm not really keeping up with how I'm using my debit card or my credit cards, and I think I just need a hands-on method. This envelope budgeting system will work great for you. And with this system, you use cash and divide it into different envelopes for different spending categories. And once the envelope is empty, no more money can be spent in that category for the month. I'm going to be honest with you guys. This was very challenging for me. And so I found myself when I was leaving the house, I had to take at least three envelopes at a time because I just wanted to, I felt that I needed to be able to respond to an emergency. And then I realized, oh, that was not a good habit to have. But for example, with the envelope budgeting system, your net monthly income can be 2,500, and in one envelope from rent, you can allocate 1,000 that will cover that expense. An envelope for groceries, you may have 300 for that. You may designate in envelope three for transportation, 150. Envelope four for entertainment, $100. Dining out, $50. Envelope six you have for savings 200, and in envelope seven miscellaneous. I love that miscellaneous envelope. I would make sure that that was always my go-to if I was having one of those dining out experiences and I really wanted the extra dessert, guys. That was good. But envelope eight is very important for emergency fund, and of course envelope nine keeps us honest and our credit score intact, and that's the debt repayment. And so that would be using this is an example of using the envelope system with a net monthly income of 2,500. And so if the envelope system is not for you, you can definitely separate these envelopes and have accounts. Another system that I learned from Myron Golden is the You Can system. And this system works well. And this is my favorite budgeting method. And it's You Can Manage Your Money system by Myron Golden. And so this is it's created through 6 cans. The cans can actually be physical cans, or the cans can represent various digital accounts. Maybe you have a checking account, a savings account, a vacation account. If you're in business, you have a business account, and you can divvy up the funds. So the first can represents You Can Tithe. And so I resonate with this can, and 10% of your net income will be allocated to this can. And then the second can is I can finish free. And this is saving for long-term goals, or even it could be your debt repayment. If you owe any debt, 10% of your net income will be allocated for I can finish free. And then the third can, which I really enjoy, and I encourage everyone to put in their budget as you're creating a budget, is I can educate myself. So with this can, it covers professional development, not necessarily a college, but maybe you want to learn a skill that can generate extra income for yourself. Or maybe you want to learn more about what's happening in the future with AI, and it will benefit you, or you just want to improve the skill that you already have, and you want to invest in certain areas of educating yourself, whether it's spiritual or natural. 10% of your net income will be allocated for that can as well. And then can number four, I can save for what I want. So this is long-term big purchases. Maybe it's your favorite, your dream car, or maybe it's a dream vacation. 10% of your net income would be allocated for that can. And the can that I really enjoy is I can have fun can, and that's 10% of your net income. And with this can, his special rules is you must spend the money in this can every month. You cannot have a surplus, so it does not go over. You must spend it. And this is to make sure that you are appreciating yourself, that you are showing yourself some love, and this is definitely going to encourage you to continue or increase the activity that is creating your living and your net income. And the sixth can, which is 50% that will be allocated to I can pay my bills. So if you're not able to meet these percentages, well, just get started where you are, know your numbers, and then set a goal where, hey, I can have a can where I can educate myself, or I can save for what I want. Maybe you have to start at putting 5% away and then work yourself up to 10%. But the most important thing is to get started, because by budgeting, you can gain control of your finances, reduce stress, and and set yourself up for long-term financial success. So I've definitely enjoyed sharing this budgeting information with you. Thank you for allowing us to share this information with our community, and we're looking forward to seeing you again very soon. Make sure that you like and subscribe to our OIC 10K Totally Lit YouTube channel, where you can replay this information and look at other pre-recorded sessions. That has been my time. I'm going to turn it back over to you, Business Director Kimberly Williams. Thank you.
Wow.